Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucy, and some of you know me as Triangle Investor from X. Today, we are covering a uranium exploration company, Tisdale Clean Energy Corp, with assets in south edge of the Athabasca Basin. I am joined by Alex Klenman, Chief Executive Officer for Tisdale. Alex, welcome to my show. It is really great to have you.
Yeah, thank you so much for having me. I look forward to our conversation. Thank you.
Me too. Thank you. Alex, let's start here with your origin story first. And how and when did you enter the uranium space? I know this is not your first role as a uranium company CEO,
Right. Yeah.
So please tell us more.
Absolutely. Well, I go back a little ways. First, as an investor, I saw from a distance 2007-8. In 2010, I invested into a company that has eventually become Encore Energy. Might be well known to your viewers and listeners. And that was quite a run prior to Fukushima. It was called Tigris Uranium. I was absolutely astounded at what could happen in the uranium space to relatively unknown junior. I mean, it was a 10-cent placement. Was trading at 80, 90 cents before Fukushima on relatively little news. It's simply sentiment driven for the most part. So that was quite an amazing run. And then in about 2016, I met a man named Ian Stalker. Ironically, was the CEO of one of the two billion-dollar buyouts in 2007 with Uranium. And so he knew the space real well. We struck up a bit of a friendship, and I was an investor in Azincourt. At the time, it was called Azincourt Uranium. He was the chairman. 2017, he said to me, "Would you like to come on board as CEO? We need energy. We need some other things." I said, "Yeah, I would love to do that." So I came on board in July of 2017 with Azincourt. Azincourt remains today. I'm still involved. It is an exploration company. We're developing a project called East Preston, and it's been quite a ride. I mean, we've raised a lot of money, and we continue to drill, and we're doing all the right technical things. But the elusive discovery hole is still on our plate, but I think our timeline's pretty good. But so that's my history in the space, and I got involved with this company in 2019. And as I was mentioning to you earlier, it sort of fell into my lap as a primary project for me, and I'm invested, and I'm high on the property. I really like what we're doing, and I'm excited to see where we go.
Great story. How do you see today's uranium market and overall fundamentals for the sector? Is this a peak of bullishness that we can get, or things can go even better, right?
Oh, look, at the risk of spewing hyperbole, we have to be honest here, and just look at the facts. And the facts are very compelling. Number one, the world's largest producers are having trouble actually producing enough. Cameco and Kazatomprom, their issues are well known. Obviously, Cameco missed production estimates in 2023. Kazatomprom is forecasting the missing of estimates in 24 and possibly 25. You've got companies like Uranium, another huge company that's having some issues globally, and at the risk of losing reserves. You've got supply bottlenecks. One of the issues we have in the Athabasca Basin is there are two operational mills, which there's a bottleneck. I just simply said, the 100 million pounds fell out of the sky tomorrow. That bottleneck is not going to allow those pounds to be transferred to pellets to get to the utilities. So new discoveries are just simply very rare. They're not coming fast and furious because chasing uranium is a very difficult thing. It takes time. It takes a lot of capital, and these things take time. And so all of these things are pointing to a supply issue. Then you have the demand side. So you have the current demand with operational utilities, and a lot of those long-term contracts still haven't been signed. And then you have the pipeline builds, and then the planning stages where they are globally, India, China, Russia, everywhere. A lot of European countries are now coming back online. Japan is
Yeah.
coming back online. So we're faced with diminished supply or supply issues, and then we're having at the same time a greater demand on those diminished. So where does this leave us? There's only one way to go here, and I've spoken to a lot of very, very intelligent people, much smarter than I am in this business and this space, who are firm believers that this is a generational opportunity. Patience will be rewarded. A lot of people get itchy right away and they think, oh, well, there's been an equity pull off like Q1 of this year. And that they think, well, that's it, the run's over. Actually, it's not. Go back to 2007. And between 03 and 07, spot went from $7 to $140 a pound. And there were 6 or so equity pullbacks in the 20 to 60% range in that time period. So this is, again, you ask the macro picture, I think it's pretty compelling and pointing us in one direction.
Yeah, and the key word, patience will be rewarded. I agree with that, definitely. Let's discuss about Tisdale and your South Falcon project. If I remember correctly, it was 2022 when you entered in an option agreement with Skyharbour. Yeah. It was an earn-in option to acquire up to 75% interest on the project. Alex, can you give me an overview of this deal and, of course, overview of the project as well?
Yes. What's really amazing here is as you know, and everyone probably listening to us today or watching us knows the following. When a commodity gets hot, suddenly there are multiple new companies trading publicly in that space.
Yeah.
Flavor of the day, call it what you will, soup of the day. This is not unheard of. This is what we deal with. But the 95% of these greenfield plays have a road ahead. Now that road is not going to be a smooth. Discovery is difficult, as we just mentioned.
Yeah.
Capital is required to make discovery. Then capital must be there must be more capital to replicate discovery multiple times, to build deposits, to build resources. It's a hard road. And it's a high-risk road for most of these companies.
Yeah.
Let's just face it, the majority of them will not get there, no matter what. That's just in the elusive nature of discovery and development. What we have here with Tisdale is the ability to develop a small deposit, near-surface uranium deposit in the basin with some marquee neighbors. And so that to me is extremely compelling because we know at the very least that we have this deposit, and if it never grows in size, if it never grows in grade, we at least know we have a deposit.
Yeah. So
the basic foundation for value is right there. We also have the speculative upside, which people tend to gravitate to when you look at some of the market caps of these pure exploration plays. They're trading at 3, 4, 5 times our market cap, a lot of them. And they may never have a discovery hole or a deposit.
Yeah.
So we have the ability to find more deposits and make more discovery on the ground. It's very fertile. It's in the right place. It has all the indicators. And typically these types of deposits that we have are found in multiple pods in proximity to other deposits. So we know that finding a one-off small deposit is possible and plausible, but the likelihood of there being additional ones in the neighborhood is pretty high. And so we're pursuing that thesis, obviously, but we also know the development of the deposit will result in a valuation down the line that I think is certainly not there today. I think we're getting about 40 cents credit per pound. Now, as we earn in, as we drill more holes, as we perhaps expand from 7 to say 10 million pounds, we'll start to get that credit. What does that credit look like? Is it $1 a pound? Is it $5 a pound? Is it $10 a pound? To put some perspective on that, we know that NextGen just paid $92 a pound to buy pounds from Cap, a hedge fund. So we're not going to get $90 a pound in the ground. Obviously not for a lower grade shallow deposit. It's not going to happen. But is $5 a pound reasonable in a real bull market? I think it probably is. So do the math. And where are we today? and where can we be in 2 or 3 years? So that's the proposition that we offer, and it's less risky, obviously, than our counterparts who are pure greenfield. But we get the greenfield upside, plus we get the positive of having that deposit in our back pocket.
Yeah, it's a rare situation where such a small company has established resources. Yeah, I have to agree with that, definitely. What is the current market cap as of today of your company?
Well, we've got 31 million shares out. We're trading in the 9 to 10 range Canadian. So, 2.5 to 3 million, basically.
Yeah.
Which is silly, because a lot of that, I mean, honestly, that's almost shell value,
Yeah.
But I think the re-rating will come, disconnect will dissipate over time. But right now, there's an opportunity for those who want to do their due diligence, to want to look into the, like you say, the rarity of a small cap, micro cap, with the ability to earn in. Now, I should address that. And one of the things that we run into is people say, "Oh, well, you have these earn-in obligations." Well, that's a lot. It's $20 million over the next 5 years.
Yeah, that's my question. What are your pending obligations from this deal?
Yeah, it's about 20 million in cash and shares of work commitments. Now people say, "Wow, that's a lot," and that may stop people from moving further in their due diligence process and maybe actually buying the stock or investing. But I say this: don't be naive. Every single one of those exploration companies that are greenfield are going to have to raise capital to drill enough holes to make a discovery, which is no guarantee. And if they do, they're the 1%. Then the honeymoon is over pretty quickly, because now you have to replicate that discovery hole 30, 40, 50, 60 times to get to a small defined deposit. So the capital that goes into that is at least 10 or 20 million, if not more. It took 7 years for F3 to make that discovery hole that they did last year. So these things do not just happen overnight. Very few companies make that discovery early on, chasing alteration, chasing these conductive packages, trying to find traditionally small footprint uranium deposits is a difficult game. And I know it well. I've been in it. I've been doing it for quite a while. And so you can throw a lot of capital at it. So the elephant in the room for us is that our terms are right there for everyone to see. For all these other companies that are trading at multiples to us, that are greedy, they can't put those dollars, they can't put those expenditures out on a deck or in a presentation, because A, they don't know it. They don't know how much it's going to cost them and build a deposit. Ours is simply, here are the terms. We're eventually buying 75% of a deposit. And by doing that, we're paying about $2.50 a pound at the cheapest side of the scale.
Yeah,
and again, at the end of the day, I think, that seems pretty good to me, to be able to have a maybe 10 million pound deposit next door to Rio Tinto in an environment where all deposits are going to be valuable simply because there aren't enough of them. This to me is really where the value lies.
Yeah, rationale makes sense with things you said over here. Alex, my question: what was done so far from your side, Tisdale, as a company, on the property in the exploration terms since you took over the project?
Yeah, no, we've done what we've started our 2024 drill program. We put 2 holes down earlier this year in the spring. We're going to go back and do some more here, hopefully before the fall. We're lining up drillers. We're doing what we need to do. And again, what we did was we need to confirm the deposit. So the deposit is 7 million pounds at 0.03%, or almost 3 million pounds at 0.056%. So it's lower grade, but it's near surface. And if we push towards what we see now, one of the things we're seeing is there is potentially a higher grade feeder in the area or within that deposit. Maybe it's deeper, because we are seeing drill holes and drill numbers that are 300 to 800% greater than the average of the deposit. So 0.03 is the deposit grade at 7 million pounds. but we've seen hits, and there's been historical drill numbers at 0.24 and things like that. So we're starting to, there is a higher grade feeder there. So that again, to us is very attractive. We'd love to bring the grade up as we build out the pound. And we think we can do that. So we did the 2 holes. We drilled into the deposit. We're beginning to confirm the deposit. We've got some numbers as high as 0.11%. Again, in multiple holes, 15-meter intervals of mineralization. So we know that the deposit's there. We know we can continue to drill numbers. That's the luxury of having the deposit, as opposed to these high-risk holes that are pure exploration holes, where we know that the chances of drilling mineralization are slim. So we can avoid that for the next couple of years and continue to work the deposit before we start to step out and look for other deposits on the property. The higher risk holes will come a little later into the deal. Right now, we're really focused on development of the deposit and growing those pounds. I think that's important.
Okay, so the phase 2, you will not test some new areas. It's just a confirmation drilling.
Well, yes, that's a fluid situation. What I would like to do simply is continue to work the numbers. I think it's important as we're growing to show investors the difference between us and pure greenfield. And really that is going to come from the numbers we generate. So continuously drilling into mineralized holes, it builds confidence. It shows that the deposit is real, as opposed to drilling the higher risk holes. Now, I'm not saying if we were to do 10 holes in August, that 2 of them wouldn't be step outs to test other areas. But we still have the reality of the deposit is it's open in many, many directions. And we're still unsure of how big it is. So we do have to drill maybe along the perimeters of the known deposit to see where it ends and where we close it off, and maybe concentrate continuously for more holes, right?
Yeah, well, what percentage of the overall ground is this deposit? Small number.
No, it's a small percentage. So the ground is about 12,000 hectares, and the deposit itself is tiny within that. It's probably 10% of the ground, maybe 15% of the ground, but not much. Again, what you have here, people need to understand this. Most of the uranium deposits in the basin were surface and horizontally aligned over millions of years. That ground has eroded, and what's left are the vertical sort of table legs of these deposits. So a lot of the deposits are more vertically aligned, so their footprints at surface are quite small. And you can have 100 million pound deposit with a 70-meter footprint, because everything's going deeper and it's going on a more vertical alignment. So we really don't know. We're open at depth. We don't know how deep it goes at this point. I think 250 meters, 220 meters are the deepest holes. We know that Skyharbour's last hole in 2015 ended in mineralization. So again, there's a lot of potential deeper in the project. But we also need to know the rest of the parameters of the physical deposit itself, and we're not there yet. So that's good.
Yeah, I'm not a geo, but geological features show similarities to high-grade basement-hosted deposits like Eagle Point, Millennium, or even Rough Rider. And we know on Rough Rider, in the last drilling, we saw some spectacular grades. Do you believe that you could hit, let's say, similar grades when expanding the exploration?
I have to be careful with that, because personally, yes, I do believe. Do I think we're sitting on a massive high-grade deposit? Probably not. The odds are against that. That's just simply. But can we up the grade significantly? I think we certainly can. Will they be 20% uranium holes? That's
it doesn't have to be. If they're shallow, they don't have to be that much. Of course,
no,
they can be much lower.
Exactly my point. And one of the things people have to realize is, listen, these smaller deposits, they're actually in the U.S. There are 10 million pound deposits in production, and they're using ISR technology. They're using different types of technologies that are cheaper and more environmentally friendly to make the extraction. And so believe where this is going in the next 2 or 3 years, any small deposit, particularly a shallow one, will be a very valuable commodity at the end of the day. And again, if we get to $150, $200 spot, which some people are calling for, then what's the value of those pounds?
Yeah, Alex, are you strictly focused on the development of South Falcon, or do you have any plans, wishes to stake more land in the Athabasca or somewhere else?
Yeah, that's a great question. In a perfect world, yes, I would love multiple projects. That will come in time if the capital is there. Now, I have to say this: our obligations are about $20 million over 5 years. And people say, "Wow, that's a lot of money for a small cap." With Azincourt, as we spoke about earlier, in 2021 and 2022, when the uranium market was really moving, and there was a lot of sentiment, there was a lot of capital. We raised, over $15 million for a company that had not hit a mineralized hole. We hit everything but an actual run of uranium, but we still attracted $15 million capital from funds, from family offices and large funds. So I do believe that we'll be able to do this. One of the issues we face today is with the 3 million market cap, we have in Canada flow-through opportunities. Flow-through funds exist specifically for the development of in-ground projects. And one of the criteria a lot of the funds really are more comfortable with, say, an 8 to 10 million market cap minimum. So one of the issues we have is the early money at 3 million market cap is difficult to find because we can't get the traditional flow-through funds into the deal yet. I have a lot of contacts with flow-through funds. So as the market cap grows, that capital will become easier to get to make sure that we do the drilling, to make sure that we develop.
Got it. You have appointed Jordan Trimble, CEO of Skyharbour, to your advisory board. Jordan knows the property well, and from that perspective, it is a great move. How will this cooperation with Jordan evolve going forward?
Right. Well, Jordan is one of the most articulate people in the uranium space. He knows it well. He's been involved. I've been personally involved with Jordan for almost a decade now. Obviously, I've completed an earn-in with Skyharbour with Azincourt, so there's comfort knowing we can work together. And with Azincourt, I mean, we did the earn-in. Majority of the earn-in was done prior to anything over $20 spot. So we did it in a harder market, a tougher market, but we managed to get it done. And today we have almost 90% of expressed in Azincourt. So I can see this happening with us. But having Jordan closer to the deal, I think, is beneficial for shareholders. Obviously, his knowledge of the business, of the industry, of the sector is right up there with leads in this sector. But also his ability to articulate it. He's built a company from 2 million market cap to almost 90 million, 70, 80, 90 million market.
Yeah, I have been following the story from the beginning, and definitely Jordan pulled it off. Definitely.
Yeah, very shrewd. I love the business model, the project generation, and then concentrate on one or two. It's a non-dilutive. If it works, it's a very non-dilutive, strong business model. But just having Jordan closer to the deal, it benefits us from his knowledge and abilities, but also having our JV partner or our earn-in partner intimately involved with us creates a better environment. There's more flexibility. There's more ability to discuss the project. We have access, obviously, with the Skyharbour geologists, collaborating. So there's a lot of good things to be involved with Skyharbour, and I'm happy that he's agreeable to come on board. Yeah,
definitely. And it's not just Skyharbour. Denison also and Skyharbour are connected in a way. So it's all networking.
Right, absolutely. And then don't forget Rio Tinto is a partner of Skyharbour as well. So again, I mean, in a perfect world, we can map out our wish list. We develop this deposit. We bring the pounds and the grade up over the next couple of years, and we have a conduit to have discussions with majors simply through Skyharbour, and I think that's important as well.
Yeah. Who else is on your team? Okay, Jordan is on your advisory board. Who is in your management board?
Really, just the most important person, really, in this entire operation is our geologist, Trevor Perkins. Trevor, I've worked with Trevor with Azincourt. I've known Trevor for several years now. And one of the things I think that's really important and worth mentioning is after Fukushima, we had a really long bear market. There was very little capital in the uranium space, particularly in the basin. So what happened to the geologists that were working at that time? A lot of projects went into care and maintenance. Some of the mines, the pandemic were in care and maintenance. There wasn't a lot of capital. So a lot of them aged out and they weren't replaced simply because, you're coming out of school, you're a new, younger geologist, you're going to have to go where the capital is, where you can work. And there wasn't that much going on in uranium. So we have this disconnect, this gap, where there were geologists were being trained and working in the basin. So Trevor has been around in the basin for 20 years plus. He was with Cameco. He's worked with big companies. He led the team that made the McArthur River North Extension discovery. It turned out to be 110 million pounds. He's made other discoveries. You can see them on his resume on our website. But to have a guy who knows the basin, he lives in Saskatoon, he knows everyone in the basin, he's worked with everyone over the years. But more importantly, from a technical standpoint, he knows how to make discovery. So it's one thing you can parachute a geologist who maybe has worked in precious metals into the basin and say, hey, help us go find uranium. There's a lot of missing knowledge that really comes from being in the ground, on the ground, knowing how the alteration packages go, knowing how the graphitic structures on conductive packages, how we look for the geochemical trail that leads us to discovery. Trevor knows this intimately, and I think for us to be able to bring this with our deal is really critical. Listen, go look at all those new juniors who are out there attracting capital and trading well. First thing you should do is go look and see if they have any uranium experience, and specifically from a geological standpoint. Has anybody on their team made discovery? Has anyone worked in Saskatchewan? Has anyone been in the basin long enough to understand the ground, understand how things work? Because it isn't easy. It's much more difficult than, say, drilling for gold.
Yeah. Who are the other people on your board besides Trevor?
There's a couple of people now. One of them has resigned. We're in the process of replacing one of them. So one of our key guys is Mark Ferguson. Mark is the CEO of a company called Arbor Metals, and they're in the lithium space. And Mark has raised a lot of money and understands the capital markets. He's a very experienced guy. And Andrew Brown is our other director. Andrew has been involved from more of a compliance standpoint, so really keeps us online in terms of what we need to do, compliance and governance. And our CFO, Brian Shin, is absolutely spectacular. I've never met anybody with a work ethic like Brian's, and always with a smile on his face. So as being a CFO job is never easy, especially with a microcap, juggling quite a bit. But Brian is experienced and knowledgeable and navigates the audit process and our books very well. So we have a really good team. Now, we're not going to get huge. I see no need to hire 47 people.
Yeah.
So if you have a strong core group and you meet all of the needs within that group, I think we're good to go. I'd like to add to the board over time with the right people, both from a governance perspective and from a capital raising perspective and from a geological perspective.
Got it. Let's cover some metrics for your company by starting with cash position. What is the current cash position as we speak?
Yeah, it's under 500,000, so we do need to raise money. We have a charity flow-through offer on the table. That's about $1 million worth of drill money, if you will. Mm-hmm. We'd like to place that over the next 3, 4, or 5 weeks. Get that done. Put out some news regarding drilling now into the fall. And there's always a need as a microcap for G&A, for capital. What we're looking at today is a very cheap share price. So if anybody looks at our chart, you'll see a decline, and that decline began in 2023. It was a 16 million share float. It was tightly held, and the share price was 40, 50, 60 cents. We raised $1 million at 40 cents. Towards the latter half of 2023, a lot of sellers hit our market, but we hadn't marketed the company, which led to how I became sort of the lead guy. I sort of picked up the pieces here. We were already down to about 15 cents. We did a placement at 18 cents in December. And as soon as that free trading stock became available to some of these buyers, they do what some people do, and they smash bids, and they traded us down to 9.5, 10 cents. But we're basing down here, and you can look at it two ways. You say that's a tragedy, and I don't like it. I'm not involved. I don't want to see it. Or you can look at it and say, wow, I get the opportunity now, thanks to other people's behavior, be able to buy this stock at such a cheap price. It's never been this cheap. It is the 52-week low in here, basically. And the majority of all the financings have been done north of 40 cents. So we think that once we get our re-rating, once news flow continues with drilling and the market picks up and uranium starts to steal the spotlight back from, say, gold and copper, that our opportunity to grow quickly is right there in front of us.
Understood. What about share structure? How many shares do you have outstanding at the moment? How many warrants options?
Yeah, we've got about 31 million shares out at the moment. And we're in the 40 some odd shares fully diluted, 45 million or so. And again, the majority of all of that's priced much higher. I think it's worth noting that I myself have about 3.5% of the company. I purchased about 1.5 million in the open market. All of it's been done in the open market. All of my buys have been set. I filed. They're out there for people to see. So I was in there buying it at 17 cents. I was buying it at 18 cents. I was buying it at 20 cents. I was buying it at 10 cents. And I'm buying it because I'm not trying to create the illusion, a lot of people do, that I'm fully invested and the insiders are loading up. I'm doing it because I believe 3 years, 4 years, it's going to be a heck of an investment. It's going to pay off. And I believe that because of the math. The math being those pounds in the ground and the value of those pounds in the ground are not going to be 30, 40 cents a pound in 3 years. In my world, there's absolutely no way that happens. Now, you can have a black swan. Of course, anything can happen. We all know that. But I like the odds of that 30, 40 cent valuation per pound growing in the next 2 or 3 years. And I'm comfortable with my average price, which is higher in the market today.
Yeah. What about some G&A numbers? So what is your monthly cash burn?
Yeah, it's only about 25,000. It's really, really low. Yeah, we're trying to keep it low. It'll grow over time. Consultants who are key to the company, unfortunately, nobody works for free.
Of course.
We are going to have to add some people. I am working with a couple of consultants as I speak now. Very, very wise guys who know the business exceptionally well. And I think it's important to have people like that working through. They make introductions. They bring knowledge to the table. And again, I just don't want to overpay for that type of thing. But we're beholden to people like that. You have to have a team. And
no, I agree on that. Definitely,
Yeah.
You have to pay people they have to be satisfied. You have to give them salaries, options. But what management fees are we talking here? Can you give me some numbers?
No one pulls more than $7,500 a month Canadian. So
okay.
I hear that from people all the time, and I say, look, do the math. For what we're charged with responsibilities, for how much heat we take in a good market, bad market. We always get more credit in a good market than we deserve, but we also get more credit in a bad market. We're like the captain of a sailboat. If we put the sail up and there's no wind, are we at fault for there not being wind? When the wind comes and carries the boat, we get more credit than we should get. We didn't create the wind. We just happened to take advantage. So we're in that sort of awkward thing. But I'm going to keep salaries down. No one's going to be paid a lot of money until we are a much more successful company. and we get that re-rating, and we attract the capital. That's the main thing. You can't spend money that is vital in the early days, and on things that be deemed frivolous. So we're cognizant of that, and we're going to look. I put $200,000 in the stock, and I do believe there will be more like that. Will I participate in placements? Yes. But yeah, again, I believe in the long term. But no, it's I think our salaries and expenses are at this point in time really reasonable.
Yeah. Do you believe that maybe a missing puzzle is marketing? Do you have marketing strategy, and how much money do you spend on marketing?
Right. No. Well, it's funny because marketing has changed over the years. Right. Used to be that you could simply do a lot of editorial content, you could do a lot of interviews like this, and now, but things have changed over the last 5 or 6 years. There's a lot more digital advertising. There's a lot more influencer-based marketing, and so we're doing a little bit of that. There's a lot of videos out there that I've done. We have a YouTube channel if you want to check out those videos. Tisdale has a YouTube channel. Those videos are listed on our playlist, and we'll continue to do that. But yes, marketing is a key component, and when the capital is there, we'll market harder. There's a balance. Like if I raise $1 million tomorrow, I can't put $500,000 in marketing. I need to put 500. Need to put at least 500 of that in the ground. You have to apply, really the value will emerge if we're developing the project. And second to that is you need to market it. So one of the reasons you and I are talking today is that effort to reach a wider audience.
Exactly.
And so yeah, we'll continue to do that, and do as much as we can with the limited budgets that we have. Again, there will be more money available in the next year or two. And when we have a very strong treasury, we'll not be shy in terms of our marketing. If anybody has followed me or knows me in the markets, I am a marketer, and I've been known to be aggressive. But this is a different. I really want to make sure that we're developing the project. That's first and foremost. I really believe when you have a deposit, the value to unlock is the drill holes you put in that deposit over time. And so that's really the number one priority. Marketing will come along.
Yeah. Final question, Alex. News flow from the company. What and when can investors expect to see some news flow? Yeah,
there will be news coming up here. Obviously, if we can secure the driller and have a timeline on drilling over the next 30, 60, 90 days, that news will come. And when we get into the fall, there will be drilling. So obviously that's really the catalyst are these drill milestones, more holes. Everything will come from that. As I mentioned, we do have a flow through commitment. We close that. That'll give us quite a few holes, and we should be real active heading into Q4.
Okay, how can investors reach out to you?
We're simply info at TisdaleCleanEnergy.com. Go to the website, TisdaleCleanEnergy.com. Get the contact info there. I respond directly. I don't have, and one way to keep overhead down is not hire a wall full of IR people to take calls for you. I do that. I speak with investors, prospective investors, and shareholders all the time. Happy to do that. I'm not adverse to tough questions, and I won't duck them. So if you want to call me and complain, you want to call me and ask questions, feel free to do that. Happy to answer every and all inquiries that I receive.
Yeah, and this interview is evidence that you are not dodging harder questions. So definitely you have my vote. Alex, thank you very much for being my guest. I wish you luck with your project and in your private life as well. And I hope to have you in my show again with some news. Thank you very much.
Thank you. And I would love to come back and update everybody on how things are going. But keep an eye on us. TCEC is the symbol on the Canadian